as mortgage rates continue to rise, as does the applications. Stay right there. When I get back, we'll talk all about it.
You were talking about money, right?
Separate yourself widely from the pack moving forward. That's something that you would be willing to have a discussion about.
Because they didn't get it.
They
were
probably
like,
didn't
right.
get it. Yeah.
To follow up with your clients, to generate more leads. You know what I mean?
Hey guys, it's Mark Jones, your millennial mortgage expert, and this is Millennial Market Talk, where we're going to talk about rates, and I'm going to bring you guys an article that I believe is relevant for what is going on in our market today. So without further ado, let's talk about it. As predicted, in my opinion, we were going to continue to see rates rise, but at the same time, you were hearing lots of reports about buyers being timid or holding back from continuing with the process of purchasing a home, and that's just not the case, at least not here in Texas, guys. So let's first jump into our rates of the day. And as you can see here, I'm using our fantastic tool that Google provides. I actually used this with a couple of loan officers earlier today. Just to show them that it is pretty darn accurate in regards to what the average that people are actually offering out there. Without further ado, let's look at this. Let's go in $300,000 sales price. Matter of fact, today, let's change it up a little bit. Let's go in to look at a $400,000 loan amount with 5% down on a credit score of 680 to 699. And as you can see here, guys, Google did add the FHA, VA, and USDA options for us to compare. So as of today, we are sitting at a 30-year fixed 4.641%. And for an FHA loan, we're looking just about dead even at 4.667, a little bit higher on the VA side of things, but also looking at USDA. One thing that I want you guys to know is when you are shopping with your current lender, or if you're looking for a lender, make sure that they are providing you with all of the options. I had a customer recently that was shown an FHA option from another lender. Essentially, after us going through their actual finances, it turned out that USDA was the best option for them, in addition to it being in the USDA property lines. They saved a total of $400 a month by going the route that I had recommended versus increasing their monthly expenses by $120. So I think it's super important that you guys get all of your options and make sure that when you are speaking with a lender that they know what they're doing, that they are experienced, and that they are dedicated to providing you with options that will make your life better. So let's look at the article of the day that I have here. All right, so we are going to be looking and reviewing an article from Mortgage News Daily, and it is brought to us by Matthew Graham. The article is entitled "Mortgage Applications Bounce Back as Rates Plunge." So what you're seeing out there, and I want to pause for a moment to just give you a glimpse of reality. You're seeing a lot of chatter about rates plunging back down, and I believe it's a way to entice buyers to jump back into the market. So rates plunging, as they mention here, have a lot to do with what is going on over in Ukraine, and prayers go out to all of those that are being affected by this. As we have discussed before, when there are conflicts abroad, when there are wars on the doorsteps, things of that nature, rates tend to go back down simply to induce more people to buy and to keep the economy churning and moving forward. What I'm seeing, guys, is there is a lot of chatter about that. I'm seeing a little bit of a drop in interest rates, but as you saw just a moment ago, the average interest rate around the industry, especially in Texas, is just about the same. You can definitely go to an online lender and get your loan botched, but I definitely would recommend you guys seeking a professional, a local lender that is an expert that can walk you through all of your options. And everything is not necessarily about interest rate. There are so many programs out there that people don't know about or don't even seek that could save you thousands of dollars in the long run. So let's get into this article. It starts with the news release from weekly mortgage applications may have come out today, but as with any economic report, it refers to things that happened in the past. The Mortgage Bankers Association application data, some of the timeliest in that regard, as it only looks back 1 week as opposed to the monthly data, which tends to release 2 to 6 weeks after the end of the reporting period. Nonetheless, much has changed in the course of the past week, specifically with rates. After pushing 4.25 a few weeks ago, per our own daily rate data, the average conventional fixed rate quickly fell below 4% by last Tuesday. The sharp drop in rates helped both refi and purchase demands last week, with each moving up from the lowest levels in roughly 2 years. So this is a chart that they're showing in regards to historic mortgage rates. And as you guys can see, and that's why I continue to say my generation, the millennial generation, has never seen rates over 5%. The first purchase that I ever made on a property was a USDA loan, and it was at 5% on the money. I'd have to say it was probably back in 2010 or so. But nonetheless, if we zoom out on this and take a big shot of the last, let's say 30 years, we're then looking at rates all the way up in the 18%. Our parents, they weren't able to buy as much house as we are. So we can see here that rates are plunging. And as they mentioned, rates hit above 4%, but not even their chart here shows that they went above 4%. So something that I continue to preach, guys, is take a look at the fine print, especially when you're shopping rates with online lenders. You've got to look at the fine print to see what in the heck is going on. Let's continue. MBA logged a weekly drop in rates from 4.15 to 4.09, which convey far less volatility than our daily numbers. Either way, the improvement was short-lived. As of today, rates are back to the highest level in years, likely to set new highs when lenders publish the morning rate sheets. Bottom line, any beneficial effects on applications from the drop in rates was very short-lived, guys. That being said, there are plenty of other reasons than rate to shop for a new home or potentially still refinance out of your current situation. A couple of them may be pulling cash out to pay for some of the gas prices that we're seeing these days. Totally joking. But leveraging yourself or getting yourself to a position that you can potentially afford a home and purchase one that you're now not paying someone else's bill. You're not building someone else's equity. You're actually building your own equity. And as I mentioned, in the state of Texas, especially in San Antonio, I believe we're going to see a huge influx for the next 2 years continuing of people coming to our great city of San Antonio. So the sooner you buy, the more equity you're going to have. Definitely get with your lender. And if you're looking for a lender locally that can finance your dream home or maybe your first home, and maybe even give you options that turn your first home into your investment home that pays for your first home in and itself. Contact us at LaCanteraLoans.com, and one of our experts is there, ready, willing, and able to help you and provide you with the options to help you succeed. This is Mark Jones, your Millennial Mortgage expert, and you guys make today count.
You're talking about money market.
Separate yourself widely from the pack moving forward. Is that something that you would be willing to have a discussion about?
Because they didn't get it. They were
Probably
like,
didn't
right.
get it. Yeah.
To follow